FEMA also authorized one-time payments of $700 per household to folks who've been displaced so they can do the immediate things of just taking care of medications and prescriptions that they so badly need.
All right, so there you have it, folks. You heard it from the humanitarian himself, with over 2,200 structures pledging $700 per household for medication. That's about $1.5 million. So when you compare that to Ukraine, how much money has gone to Ukraine? Well, in humanitarian purposes, $3.9 billion for emergency food assistance, healthcare, refugee support, and other humanitarian aid, $26.4 billion for financial support, 46.6 in total military support. So this guy right here, he loves to put other countries first, the American people last. So what's happening in Maui it's devastating. It's crazy. And I'm not going to get into any conspiracy theories here and all that stuff because that just doesn't serve any purpose. I want to talk about what's happening in the space right now of finance and crypto, but I'm curious on your guys' thoughts on this because I've been to Maui about 5 times, and every time I go down there, I go down to Front Street, and I love it there. Lots of history. And they're doing their best to, see if the banyan tree, the 150-year-old banyan tree can make it, but everything else is completely obliterated down there. And when they start rebuilding, what are they going to rebuild? Are they going to rebuild 15-minute cities? Are they going to rebuild an AI smart city? What are they planning on doing for that? So it's devastating. But you look right here, guys. So the money in the United States with taxpayer dollars going towards Ukraine since the invasion, $76.8 billion. You compare that to Afghanistan, $4 billion, Israel, $3.3 billion, Jordan, $2.6, Egypt, $1.5, Ethiopia, then Iraq. Nothing comes close. And so when we shift gears here and we talk about what's happening in the crypto space, what's happening with the dollar and the inevitable collapse of the dollar, it's over. It's just a matter of time before it starts to shift. And you guys got to be ready for this because whoever they sold out to, whoever the politicians, the government sold out to, whatever plan they're ushering in right now, it's happening, and it's happening right in front of our eyes. And I'm going to unveil a lot of stuff in this video, and I'm going to share with you a lot of charts that you got to see from the dollar, the DXY, what this means, how we compare this to the euro, the federal interest rate, the S&P 500. We're talking about the effective federal funds rate. We're giving you some predictions about what's going to happen for the dollar for 2023, how that's going to affect the entire crypto market. XRP, a bold move for happening for XRP with over in the UK and Ireland, and some game-changing crypto news. And I'm going to be sharing with you why XRP is dropping right now in price when all these massive partnerships and all this massive bullish news is taking place in the space right now, and how you can prepare before the wall of money flows into the crypto space. We got some massive Coinbase news as well too. So buckle your seatbelts. Comment 777 if you're feeling blessed. Comment 777 if you're feeling bullish. And as always, let's run it. All right, bull runners, welcome back to the channel. So let's get right into it. I'm going to talk about why XRP is dropping right now. First and foremost, we look at the US dollar index, the DXY, which compares the dollar to a basket of other currencies that I'll explain in a bit. But the dollar has been rallying since July of this year. And so when we were to measure this out, it's been rallying for about a month. And so at some point, this will turn around. I talked about this in a previous video. My prediction for this, which again, this is not financial advice, this is not investing advice, this is educational purposes only. And if I give you a prediction, doesn't mean it's going to happen, but we see this descending resistance right here. If the dollar doesn't hold the 200 moving average, the SMA, in red, in this downward trending resistance line right here, if it doesn't break it and hold it as support, then more than likely the dollar would get rejected and trade to the downside, and we would see a rally happen for Bitcoin, for XRP, for Ethereum, for the rest of the market. So it depends on what the dollar is going to do, and I'm going to talk about what would cause this. But ultimately, my price target for the DXY is the same as Morgan Stanley, towards the end of 2023, near 98, which when we look at this SMA right here, this would be the 1,460 moving average, the 4-year moving average for the dollar. That's where I think it's going to finish off at the end of this year. And we're going to see a rally in the crypto market. Now, I'm going to explain why, but first and foremost, the US dollar index is a benchmark for the international value of the USD on the world's most recognized currency index. And it was originally developed by the Federal Reserve in 1973, but today it's maintained by what's called the Intercontinental Exchange, or ICE for short. And so it compares the US dollar to 6 other currencies: the euro, Japanese yen, British pound, Canadian dollar, Swedish krona, and Swiss franc. Now, not all these currencies hold, the same weight. The euro has the highest weight on the index at 57.6%. The Japanese yen and British pound are about 13.6% and 11.9% respectively. This means that changes in the US dollar to the euro rate will have more influence on the DXY's value compared to changes in like the US dollar to the Japanese yen. And so when we look right here at the chart and we compare the two, the euro, it moves inversely to the dollar. So on the left-hand side, you see the euro to the dollar. On the right-hand side, you just see the US dollar index right here. And so as you can see, when the euro was at a high at about $1.23 per US dollar. And so it made sense to be getting out of euros right here and into the US dollar back in January of 2020, January of 2021, and getting into the dollar right here back in this date. And then we see right here on September 27th of 2022, when the euro bottomed out, well, that's when the DXY was topping out in comparison to the euro. So where is the euro going to move next? Well, we see the 200 SMA. And if we hold the 200 SMA for the euro and bounce off of it, then that's where we could see a rejection from the 200 SMA on the DXY to the downside. And so we see the 4-year moving average where the euro bounced off of. And if we can trade back up to that for the euro and continue with bullish momentum for that, what would happen there? Well, the dollar strength is mirroring what the Federal Reserve is doing with their rate hike cycle. And as of 17th of March, historically, through these charts, the DXY rising for the start of 2021, aided by recovery in the U.S. economy following the pandemic-induced slump. And as rising inflation captured headlines by the start of 2022, the DXY index would surge to a highest level in nearly 20 years by mid-June. And this is quite an interesting chart that we're looking at right here, showing a ratio where you can see the black trend line of the interest rate, which is the 5-year yield and federal debt trading within a megaphone pattern since the 1990s. And its higher highs have naturally coincided with peaks in rate hikes, which is the red trend line. And the last peak was on October 2018. Currently the ratio just broke within that range again, within the red area, and it actually shot well above it. And so the whole system is broke. What the Fed did, this is what caused the bank runs, the largest bank run since 2008, just with 3 banks alone. And it's going to get even worse. And the whole system, it's like a house of cards waiting to crumble down. And it's happening right now. You guys are at the forefront of this, and you need to see what's happening so you can understand what to do next. And so this shows that the Fed is on a timer and has a limited time to act and stop hiking before they jeopardize collapsing the system that is in place for 3 decades now, bringing balance to the market. And the S&P 500, the blue trend line that you can see, has seen great periods of growth and stability systematically with this in place as long as the Fed doesn't go off limits with its hiking, which it kind of did for too long, and that's why we broke above where the rate hiking should peak within this range so that they wouldn't jeopardize the whole system. But they did jeopardize the system, and that's why the bank runs took place. So do you guys think it's time that they act now, or do you think that they should keep hiking ranks even more and more? If they keep hiking ranks, then you better be ready for more bank runs to take place. And if more bank runs takes place, obviously it's bad news for people that just save money in the banks and they expect their savings to go up in value when people are going to be pulling money out of the banks and putting it into the cryptocurrency market if the Fed just keeps going up. But as you can see, when the peak of rate hiking happened and the Fed pivoted, they paused, and then they started dropping on rates. Well, then what did we see in the S&P 500? Right here, we saw a drop in the S&P 500. Also right here, when we saw them start dropping rates, the S&P 500 dropped. So it's not necessarily when they're raising rates that the stock market crashes or the crypto market crashes. It's when they pivot to pause and drop the rates. And then we see, this red line right here, the Fed effective federal funds rate, which is the main benchmark rate that affects how expensive it is for banks to borrow money from each other. And then it affects like real estate loans and all that, everything else, basically car loans. And so the system is imploding. And as you guys can see right here, I have to go all the way up here to even see the Fed's funds right there. So it is drastically beyond the peak of this megaphone where they should have paused and pivoted and started lowering. Just similarly enough, when the effective federal funds rate, the interest rate was so low, they shouldn't have been printing as much money as they were. But why were they doing that? Then, sending it to other countries and then using taxpayer money for Ukraine. So as you guys can see right here, 4.417% for the US government bond in the 5-year yield. One thing that's interesting, if we're looking on the RSI right here on why this will be coming back down, is we crossed below the RSI based moving average right here, and we were in overbought territory, upwards of 4%. Yeah, we're pushing a little bit higher, but this is kind of like a dead cat bounce right now that's taking place. So what I feel is going to happen is we could push a little bit higher in the short term, but eventually we're going to be coming back down on the 5-year yield. Similarly, the last time that we crossed below the RSI-based moving average was in 2018, and we saw a drop from 2.9% all the way down to 0.2%. The time before then, we saw it peak out at about 5%, and then it dropped below at about 4.8%, and it crashed all the way down to 0.6%. The time before then, when we crossed below the RSI-based moving average on the RSI right here, was back in the year 2000. So we see 2000, 2007, leading to the 2009 crash, and then we saw the year 2000 for the dot-com bubble crash. We're going through something similar. So we're at 69. Now we're 67 on the RSI. We are in what? We're in overbought territory right around 70. So where is the RSI going to go next? This is common sense at this point. It's going to go down. It's going to go down. Now it could bobble around here for a little bit longer. Sure, like I said, it could push a little bit higher, but eventually it's going to come down. And when it comes down, it's going to crash hard. And you guys have to be ready for this. And so when people are moving out of bonds and treasuries and all that, where are they going to be putting money? Well, that's what I have to talk about for crypto in this video. Now, here's another interesting chart to look at. This is called the Fed Pivot Indicator. So we're at the point where the Fed would usually halt rate hikes and begin easing again and pushing more money into the economy, as they gear up for the next rate hike coming up at their next meeting, eventually blowing up the entire system. So this chart essentially is a proxy for the acceleration rate of interest expense for the US government. It has been a reliable indicator of a Fed pivot for 30 plus years. As the Fed has endured, the US doesn't enter a death spiral. So it's called a debt death spiral. It's an increasingly large debt load with ongoing deficit that only gets exponentially larger as interest expenses increase. And now since they basically pushed back the debt ceiling and they delayed it, they're basically allowed to print as much money as they want or do whatever they want within a certain degree, but that just means they can still do whatever they want. So the Treasury has to issue more bills, notes, bonds to fund interest, which drives up supply and can overwhelm demand, thus increasing interest expense even more as yields increase, and this spirals out of control, with the only way to make payments being issuing even more treasuries, even more debt. For the past 33 years, the Fed has used monetary policy to ensure that this spiral doesn't occur. To avoid this, the Fed will need to pivot soon. Otherwise, they risk having to do even more easing and monetizing of debt down the road, meaning that the longer that they keep raising rates, the more money that they're going to have to push into the economy when they finally do make that pivot. And you know what that means when they start pushing money into the economy, massive bull run for the crypto market, because when they push money in the economy, the value of the dollar goes down even more. And when the value of the dollar goes down even more, the dollar moves inversely to crypto. So then crypto goes up. So to keep this line inbounds, they need the middle of the curve to fall. Or maybe they'll allow a brief spike above, and given the length of that chart, maybe the brief can be a number of months. But as far as what would be normal Fed behavior, we're at the tightening limit for interest rates. Now, one thing that's interesting is this was written when this was right at this period right here to think about going down. And look at where it is now. I mean, I'm just keep scrolling all the way up here. So we are at the breaking point. It's a complete breaking point right now. They broke the economy. Well done, Jerome Powell. You guys did it. And we're only at 5.33 on the effective federal funds rate. Compare that to 1980, and you saw 22% back here. Now, one thing that's interesting is if I go to the DXY and I sort this based on the month right here, and I compare this to where the DXY was compared to other countries, the peaks, the first peak, right, 1985 that we can see right here was all the way up at like 166. Then the next peak was at 120. Then this peak is at 114. So progressively, the dollar is getting weaker compared to other countries all the way since 1985. And that makes perfect sense because a global reserve currency only lasts, every 75 to 100 years or 80 to 100 years, give or take 5 to 20 years. So where's the dollar at? The dollar is at year number 79. So we have either 1 year left or we have 21 years left. So within your lifetime, right, if you're under the age of 80, If you're 80 and you live to be 100, you'll more than likely see it in your lifetime. If you're 100, well, if you live to be 101 up to 120, then you'll see it in your lifetime. And according to ICE, there are no regular scheduled adjustments for revaluing and rebalancing the DXY. It was adjusted in 1999 when the euro was introduced as the common currency of the EU. So data from ICE shows that the DXY hit the all-time high of 164 in February of 1985. And so the chances of it hitting that again, very slim to none. And so, according to ICE, the index is affected by several macroeconomic factors, inflation, devaluing the US dollar, and component currencies, as well as recessions and economic growth in countries of the component currencies. And so economic growth for other countries will be based on a lot of blockchain development as well too. So with these other countries being more favorable than the United States, that's further escalating the collapse of the dollar as CBDCs start to come into play. So dollar strength has obviously been mirroring the Fed rate cycles. And if we look at the DXY forecast, we think that the DXY could consolidate around the 103 mark until the next first tier data in the US are released next week and could reignite the re-engaging of the US growth and the Fed rate expectations. So in the longer term though, strategists at investment bank Morgan Stanley saw the DXY ending at 2023 at 98, down from the previous forecast of 104. So they're getting even more bearish on the dollar. Global growth is showing signs of buoyancy. Macro and inflation uncertainty are waning, and the U.S. is rapidly losing its carry advantage. In a note made available to Capital.com, Australian bank Westpac senior economist Elliot Clark looked even further, although refraining from making DXY forecasts for 2025 or 2030. So turning to the markets, term interest rates are likely to peak ahead of the last Fed funds rate hike. Specifically, he's forecasting the 10-year to fall from 3.5% in September to 2.3% in the end of 2023 and 2% at the end of 2024. So the consequence for the US dollar is that we continue to see it at being near its peak for this cycle, said Clark, while adding that the DXY index was forecasted to trend towards an additional 5% decline by the end of 2023. So categorically, massive institutions, massive banks, and big investors are bearish on the dollar. So with Morgan Stanley predicting 98, we're at 103 right now. It's not looking good for the dollar, but that's looking good for crypto. So in the meantime, why is XRP down with all this good news happening? Why is it down 9% in the past 7 days? It's at 59 cents. Well, like I just mentioned, it's because the dollar is rallying in the short term. So when in doubt, zoom out. When in doubt, zoom out. Have a macro market look. Play the game in decades, not in days, and that's how you're going to be able to set yourself up financially long term. And so when we see this ABC corrective wave, if the bottom is in for XRP for this rally specifically at 58 cents, and we see XRP break this falling wedge pattern, and we see a retracement for XRP between 72 cents, what I would expect, and again, I could be wrong here, is even if XRP goes lower and it just kind of bobbles around here for a little bit, which is the support that was resistance back in June of 2023 and also March of 2023, it was resistance. And that's a major area that it needed to break through and come back down to retest. Even if it bobbles around here, when it breaks this descending resistance that you can see in yellow right here, I would expect XRP to snap relatively quickly between 72 cents, which would be a 0.382 retracement, all the way up to the B wave of 83 cents, and to snap up quick and then come back down for a little bit and then form another consolidation pattern. And it would either be some form of, symmetrical triangle, maybe a rising wedge or something like this over the long term leading up to 2024. And then for XRP to snap to the upside with these massive partnerships that are taking place and eventually to retest the $1.30 resistance somewhere up here. Whether it's this year or next year, I don't care. It doesn't matter to me. I'm holding XRP for the long haul. Yes, I do hold XRP, but ultimately, I feel like something like this would take place. We'll see XRP break to the upside. Shoot, if we keep coming back down with bearish news happening in the crypto space, maybe the economy completely implodes and that affects everything, that nothing's safe. The only thing that would be safe is food and water. If we go into World War III or we see some complete black swan event, which could happen, you got to be prepared for anything. But ultimately, the decline in the dollar is obvious. all the data that I'm showing you guys about the DXY, and I'm showing you about the dollar, and also when you see, the fact that the U.S. government, the politicians have sold out, then they're just sending money to other countries, and what Ripple's doing, they joined the Digital Pound Foundation over in Europe to develop a central banking digital currency for who? The United Kingdom. The company will become a foundational member and will represent its board of the head of policy, according to an official post. And this happened a while ago. And so back in October, the company revealed a key partnership also with the Central Bank of Bhutan and the Royal Monetary Authority to test a cross-border payment application for the digital Ngultrum, I think that's how you say it, via CBDC. So a digital pound, as the Digital Pound Foundation envisions, will give the United Kingdom a new tool to accelerate its economy transition, a digital society. So does this play a role into what's happening with Maui? It was protected. It was a sacred land. They couldn't build anything on Front Street. Now they can. So no conspiracy theories here. It's just crazy. In addition, the organization seeks to ensure the country's spot as the leader in the digital space. So digital society, keyword digital society. That's what where we're heading. Artificial intelligence, universal basic income, 15-minute cities, digital IDs, mark of the beast. The Bible is predicting all this stuff. So Ripple has applied for registration as a crypto asset firm with the UK's Financial Conduct Authority, the FCA, and for a payment institution license also in Ireland. This is massive news. So these partnerships, guys, they're in the process of applying for their crypto asset registration in the UK. And last month, Ripple received in-principle approval for the major payment institution license in Singapore's Central Bank Monetary Authority. And Brad Garlinghouse earlier said that the community will remain committed to the U.S. as its global hub. However, big however here, the lawsuit against the SEC, and their approach to the crypto market led to most developments happening outside of the U.S. in the last 2 years. Over in Europe, Saudi Arabia, you got Dubai, you got, Asia, Pacific. And the SEC versus Ripple, the judge is greenlighting investment banker declarant's entrance. So what does this mean? Well, the most recent update, the Securities and Exchange Commission versus Ripple Labs judge, Annalisa Torres, granted permission for an investment banker to make an appearance. And in an effort to prevent the divulgence of sensitive information as per a previously sealed court directive, the court seeks to address issues related to orders that rejected the SEC's plea to seal the Hinman speech document, as well as Ripple's request to seal information regarding XRP sales, including programmatic and institutional sales. So that was Ripple's kryptonite at the time, just like the Hinman speech was the SEC's kryptonite because of saying Ethereum wasn't a security. And then now, Ripple selling XRP to institutional investors being a security. I more than likely feel that Ripple's just going to have to pay some money for this. And this is going to be by 2024, this is what's suppressing XRP's price as well too. But it's not a bad suppression because XRP has the clarity that it's not a security. So it's just a waiting game. It's patience, right? You got to have massive patience, which sucks. I get it. I hate having patience. I'm very impatient sometimes. I have to tell myself, goose fry ba. Okay, I have to take a little breather. I gotta calm down. I gotta sip some water. And I just gotta breathe here because I want to go camping on the beaches of the moon tomorrow, just like you. But that's not the way that it works. Institutional investors are continuing to bet big on XRP. And now the National Futures Association, a CFTC designated SRO, has approved Coinbase Financial Markets as a registered futures commission merchant. Very interesting. BlackRock is choosing Coinbase, for their partnership on what they're doing to get into the derivatives market. And Coinbase can now offer futures contracts in Bitcoin and Ethereum to eligible customers in the United States. So Coinbase customers will soon be able to directly access futures through Coinbase Financial Markets. And access to a CFTC regulated crypto derivatives market is essential to unlocking significant growth, enabling broader participation in the crypto economy. So if you subscribe to the channel, you watch the past few videos I've been making, I've been talking about this with derivatives, ETFs, getting into the derivatives market, Ripple partnering with, see the talks of JP Morgan Chase and BlackRock and pushing derivatives. Derivatives is like up to 1/4 So XRP being able to capitalize, 1 trillion, 2 trillion, up to 5, 10 trillion of that, XRP is bound to boom. And today, we are pleased to announce that approval has been secured which will allow eligible U.S. customers to access regulated derivatives products through Coinbase Financial Markets and alongside our spot market for a seamless experience subject to the oversight of the CFTC and the NFA. Approval for U.S. customers to access regulated crypto derivatives will allow more people to access the crypto economy in the United States in a safe way that helps keep the U.S. at the center of digital innovation. For what? For digital economy. So, massive important milestone. The global crypto derivatives market represents 75% of crypto trading volume worldwide and is a critical trader access point. Now, a lot of people will say, well, the crypto market being propped up by that, it's fake money, it's debt. Of course it is. Everything's propped up off of debt. So you just got to know how to capitalize on that. You can't be a tribalist here. You can't even be like all bullish on one project. You got to see where liquidity moves into industries, and blockchain is that industry. Crypto happens to be, those ships. The altcoins are all the ships tied together, and some of them move quicker than others depending on what sector of crypto the money's moving into. And that's why, play to earn gaming, you see artificial intelligence, banking projects, decentralized finance, and metaverse are going to see a large surge going into this massive bull run leading up to 2025. Product benefits are why we acquired FairX in 2022, which is a CFTC regulated futures exchange, now known as the Coinbase Derivatives Exchange. Since then, the exchange has successfully launched nano Bitcoin and Ethereum futures contracts sized for the retail investor. And on June 5th, they launched a larger version for institutional market. The Coinbase Derivative Exchange is open to third-party brokers, FCMs, and market makers. It has established a deep liquidity pool with 4.7 billion Bitcoin and 2 billion Ethereum futures traded in notional volume so far in 2023. And so obtaining FCM approval was their next step in bringing these transparent and secure markets to their customers so they can access regulated futures contracts alongside their liquid spot market. In the next few months, they're going to be providing additional information on how their verified U.S. customers can access our futures offerings. So it's happening right now. And when we look at the total crypto market cap right here, we're at a critical threshold of what's about to happen next, because we've tested this resistance multiple times. We're a little bit below it. I mean, this resistance is anywhere between 1.2 trillion, 1.25 trillion dollars in terms of total market cap. We're at 1.1, and if we don't hold this 200 moving average, we could come back down to the 4-year moving average right around $1 trillion. So there could be 100 billion wiped off the table in the short term. If the dollar continues to break that downward trending resistance I showed you guys, and it continues to trade upwards, then I would expect crypto to see more of a sell-off and more of a shakeout to happen. And then if we can't hold the $1 trillion market cap, we could drop all the way back down within this range between 940 to 960 billion dollars. That'd be the next support zone that I would watch. But eventually, what I feel is going to happen for the entire crypto market is once we breach this resistance right here and we finally break to the upside, if we back test it or not, it doesn't matter. But once we break it and we hold it, that's when we're going to start seeing massive price momentum, and we're going to see the crypto market rally back up to $2 trillion. And then we could see some sort of consolidation patterns leading up to 2024, and then further breaking to the upside and passing all-time high as derivatives, spot, ETF money, BlackRock money, Fidelity money, institutional money, Ripple getting done with this lawsuit for good, them paying the SEC their right to passage is what I call it, the right to passage money, just like Amazon.com, just like Tesla. You got Apple, you got all these massive companies that have been in lawsuits with the SEC. Hey, JP Morgan Chase, the CEO, Jamie Dimon, he's been slapped on the wrist with how many billions of dollars that he's had to pay them off just to keep doing business as the largest bank in the United States for doing what type of illegal things has he done? So if we look back all the way to 2015, it's a money's game here. So now that Ripple has the money, they could just pay him a little bit of bread. It's like, okay, yes, sure. Ripple sold XRP if they did, and they lose that part of the lawsuit. They sold it to institutional investors, and that constituted security. XRP is still not a security. They can keep doing business as usual. That's why they're making all these partnerships. That's why Ripple is making all these bold moves overseas in other countries. And something like this is what I would expect. And so even if it takes time to break, it's just going to keep trending upwards. Then we're going to see a snap. Once we see a snap, we'll see a back test followed by a consolidation pattern, continuation to the upside, leading up to 2025 for the peak in the markets. And just like in 2023, when the first gold ETF was approved and we saw paper trading of gold, gold went on a massive parabolic bull run. And so I would expect the same thing, not only for Bitcoin, but when Bitcoin sees that happen, that will happen for the entire altcoin market cap. And you have to be ready. And what's the best way to be ready? Well, that's by subscribing to the channel, backing up the truck all the way to the bank, grabbing the bags, packing them, stacking them, leaving no bags left behind because the spending power of the dollar has been going down in value. That's a fact. Blockchain technology going up in value. That's the truth. And together, we're all going camping on the beaches of the moon. I will see you on the next video. I will see you on bullrunners.com when you subscribe right now. As always, you know what to do. Stay bullish.